Run it, I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah.
Hi and welcome back to the Conscious Day Trader. I am Yanis, and today we're going to break another pound-dollar trade for $400 and I believe $93. 521 were before commission. Obviously, we have to pay something to the broker. So super good day again. Quite stressless compared to Tuesday, where we had to trade all day for the same amount of money. So I'm going to break down everything. I'm going to break down the entry, how I analyzed the correlation between the dollar index and the pound, and why did I enter? Why was my bias short? The execution. And if you like all that and you want to learn from that and you enjoy watching these videos, make sure you subscribe and like, because a lot of the people, about 60% of the people that watch the video are not subscribed. So make sure you subscribe and like, and I'll do a lot more of these on a daily basis if you like them. So let's jump onto the charts. We're going to go straight on to MT5. It's quite a good feeling to have it back. 150,000, and that's the profits, 494. And obviously we have some profits from the previous 10K month that I haven't taken out. So we're going to jump onto the results. 494 profits, and we did, like I said, I always have two positions and I reposition them. Today I took some profits out after 13 pips here, after 10 pips on this one, 18 pips on this and 10 pips of this. So I didn't let the one runner go. The reason was because when you open a new account, you always have to be aware a bit of the psychology of getting a bigger account. And that was my conservative way of making a solid day. We've got news coming up in the afternoon. So I wanted to have a solid day to jump into the new sort of bigger account. So let's go on to TradingView and we'll break down the trade. Today is the second day of February. We had Fed announcements yesterday, so quite a big day. We're going to start with the dollar index, and I'll tell you what, I'm just going to take everything out because for new people coming onto the channel, they don't really know, and they don't know ICT, especially the 2022 mentorship. This will sound a bit confusing, but let's make bias for the day by removing all the things on the chart, remove all drawing indicators. And let's see what's happened. So this is the previous daily candle. We had the news and we had, if we go on to the day, let's see where, first of all, where the dollar is. It's quite weak. It's been coming down heavily since the 4th of October 2022, and now it's come to this level here where it's gone just below it. So it's taken out, if you want, the sell side liquidity below this area here. And then where would be the next? If we look on the left side of the daily, we can see that we have this move that broke up, came back down, filled this fair value gap. However, this down here on the daily hadn't been filled. And let's see. Let's change that into our fair value gap, and it's going to be our daily fair value gap. And there we go. So it's come and filled that fair value gap. So this is a move back in April, 25th of April. So what can the market do at this? This is the index. We didn't trade the index, but we do need to analyze it because it's a pair with the pound. So we look at this and we correlate it with the pound dollar. Now we do have this low here that it came, and then we had this order block at the bottom of this level here. So this will be quite an interesting level to see what the price is going to do below this. And let's see if it's a round number. It's close to, where is the 100? It's down here. All right, let's take that there. Wow, I made that box exactly on 100. That was totally random. So that's the net area, which would be quite interesting to see how far that is. Let's see in terms of pips. So that would need to take 800 pips. So if you take sort of the previous big candle that we had there, that's 900 pips. So the index can move. So let's see what is the next target. That's one thing to start thinking about when you're opening the chart and creating bias. First thing we're going to do is create and put in the previous daily high. So I like using the, where is it? The horizontal ray. And that will stop, and you use the magnet, and then you can magnet the price there. I like labeling it. And then we'll put the next one on that one there. And that's the previous daily low. So just by looking at this, what can we see? We can see that the price is outside the previous daily low. So we had this price action here. Depending on where this candle can close, we're seeing this sort of fair value on the daily being formed here. All right, it's not formed yet because this candle is today's candle, so it's active. So that would be for tomorrow to see what happens there. We've got our daily high, got our daily low, then we need our equilibrium. So we're gonna grab, put the line there, but we're gonna need first the fib tool. And the only reason I use the fib tool is to grab the 50%, which would give us, that would give us the range of the previous day. It would give us the sort of the discounted area below the equilibrium, premium price above the equilibrium. So now where are we at? We are extremely discounted area, and we've hit this fair value gap on the daily. So is the price, and we've taken these previous lows here, is the price, where's the next target? Where's the obvious next target? Well, we can fill this fair value gap. We're in sell side liquidity, and we've had a big move to the downside. Can this retrace back to equilibrium? That would be my question. Can I trade that back into equilibrium if I'm buying sort of the dollar index? But we're thinking in terms of what is the pound going to do. So what is the pound going to do on a weak dollar? Is going to go up. So let's jump into the 15-minute. Now we've put in our lines, and let's go back to let's put in the indicator, which is the Forex market sessions, so we can see where, I don't need all this. It looks like it hasn't saved my settings for some reason, but we can quickly put the 7 o'clock to 10 o'clock. This is London time for the kill zone, pre-market, and the actual delivery of the open. And let's take the price back to, with the replay, back to 7 o'clock. What do we see? We see a physical gap. Okay, and this is on the 15 minutes. So we can take this, label that gap. You would take the label, how you would label this gap, right? So we've got price action. From this candle, it jumped down to this candle. So the actual gap itself is from here to here. How many pips is this? This is 259 pips. What's the chance of that closing? Quite high. So what we want to see is, where has the price closed already? Because I'm saying it's quite likely because it's already closed this price here. So it's done 137 pips, okay, from the 2nd of February, 12 o'clock, opening candle to 2 hours. So let's grab the box, and what we're going to do is take this, and because this has closed up to here, we're just interested on the actual fair value, as actual gap of the price, which is here. This area still is mid-air. It hasn't got a price between this level and that level. So this is showing me that there is a chance that the price can go high to fill in the dollar index gap. If the dollar is going up, what does that mean for the pound? It means it's going to be weak and short. So I want to be shorting the pound. And that was the frame that I had in terms of the dollar index, okay? So what do I think? I think this fair value, this gap is going to be filled. So I'm going to go on to the pound dollar. And what am I looking for? Shorting opportunities, just because of what we discussed. So we're going to do the same. So let's go to the daily. Just to save some time, I've already put the equilibrium in. You would do the same thing that we did onto the dollar index. So we had the previous daily high, previous daily low, the fib for the equilibrium, and the price was going in premium price as we opened into the market. And we're going to see that when we start looking on the 15-minute. We had the news yesterday. You see that spike here. So if we go to today's open, this is on the 15-minute. So let's go 7 o'clock a.m. Let's get some room. What can we see here? So we had this spike of the move, huge move from the previous daily low to the top here. That was how many pips? That candle alone was 93 pips. Remember what we said about the London Open? We were averaging around 30 pips to 100 pips. That is a huge move. What does that mean? That move is going to have some reaction. You're going to have this fair value gap here, which will want to come back and fill. You can see that it's filled up to that point. So you drag it down. That is the actual fair value gap. And this is on the 15-minute. Where is that gap? Is on the equilibrium. That's another nice area. Now we're bringing it together. Can I fade this trade downwards into equilibrium? Because we've got information that there's a gap on the index overnight. So the dollar will want to go higher, which means it's going to be weaker pound. And we have these areas of sell side liquidity to hit. We have equilibrium down here, and it's trading and it's hovering above this previous daily high. So what do I want to, if I want to fade this and trade it back into equilibrium, what do I want to see on the open? I want the price pushing up. And why do I want the price pushing up? Because I want to get a better price. I want a very safe trade. The higher this comes up in the open, the more safety I can create by being close to the top of range of this move. Next top range is up here, which would be from this sort of open, it would be 25 pips. So I don't want to be entering on the bottom of this to deal with a 25 pip, push the liquidity if it does that. So I want to be as high as possible. So what we're going to see, we're going to see the open. We're going to push the candles in. I've put the entries in. They're not all entry one. That's one. This is two. And this is my third entry. And these are exact price from the MT5. We can see that in a sec. And then we're going to go onto the minute, because this is my trading now arena. Okay, we had 7 o'clock open. The price pushed up above the daily high. If I had seen this, I would have probably been interested. Wait for this to break below here and get an entry. I didn't see that. So I missed this move down, and I wanted to see the price come up as high as possible. And we saw another break, and this is a big clue. Okay. This is a big clue here. And why is that a big clue? Exact equal price on the previous high. You see that? Exact to the pip. All right, so this is, so we had this move down here as it opened, coming in from the Asian market and the London Open. Then this is the Judas move. Okay, this is the fake move, manipulated move that the market is going higher. Why? Because a lot of people will be like, well, we've got buy side liquidity here, we've got buy side liquidity here. We had that huge move on the Fed announcement. The pound can be going higher. But what have we got? We've got the information from the dollar. We have seen that gap. There was opportunity for it to go higher. So we were looking for a shorting opportunity. The higher this comes up, we're like, great, let's get a better price. And this gave me a price here. Now, would you be entered here? Probably not, because ICT, you want to see a break and then it fills the fair value gap and then you go in. However, like I said, I've done the analysis and I'm confident that I want to take a good price if this comes up to the previous daily high. And that's where you can combine ICT concept with your own analysis and own sort of breakdown of the charts. So as soon as I saw this not creating an equal high and the price coming down, I entered here. So I entered at 123943. We can double check that. 123943 there for 18 pips. So if we go back onto this, 18 pips. So that would have been at the bottom of this swing high, a swing low here, 18 pips. So you might say, why did you not hold that trade? Like I said in the beginning, I've just opened a new account of 150,000. So I've passed the milestone. So they've given me another 25,000 capital to trade. And a lot of the times you can get excited with this extra money and you think you've got more room to play with. So I wanted to have a solid day, and that's why I took 4 trades between 10 to 15 pips, always having 2 trades in live and managing them. So sometimes I add a third lot size, and the reason is so I can manage the 2. So if I've got 2 positions and I'm not happy with one of these positions, I will add a third one, and my exposure now is a little bit bigger, but I know how to manage those 3 because I want to kill that top one. So as soon as it gives me an opportunity to kill that trade, either at break even or to take a bit of a loss and get a better price, I will do that. So we're in here and we're watching the market. It's coming down, coming down. What am I waiting for my second entry now? What do we do on the second entry? We wait for a confirmation of the break and then refill of a fair value gap, right? So this is where it's coming back, and that's my entry there. I'll just drag that there. That's my second entry. Why? It's broken heavily the previous low, the previous swing, the intermediate swing low, and it's come back up. It's created the 5-minute fair value gap there. It's filled that and come back up and taken this high here. That liquidity, small liquidity here, you see that? It's just tapped it, taken out in case you had stops running above this, trail stops, and then came down, and that was when I got into, I had killed these trades for 15 pips. If I held that, that would have been a beautiful delivery of price all the back to equilibrium down here, about 56 pips or whatever. But we're learning. We're not the gods of, we don't know how the price is going to react. So we just take profits as we go. So we see this comes down, takes out this sell side liquidity. This sell side liquidity is from the daily, remember? So this is where you're like, okay, how is the price going to react to sell side liquidity? And then we're going to continue. And this is where I had my final entry here. So this got filled and then it went a bit up and then delivered a drop here, which I took another 10 pips. So below this, I'm targeting this intermediate low here. And there we go. That I was out of this session. And that was a really clean trade. I don't know what you think. Let me know in the charts if you can see what I'm seeing or if this is really confusing. A very nice in terms of, it's quite clean execution. Yes, you didn't have that clean break from the top when the fair value gap refilling ICT. But even if you got in this move here, because you had that break of the previous low and it came back, created a fair value here, and you got in here, you would still get let's see the equilibrium. You would still get 37 pips from what you've learned in the ICT mentorship. And look at that delivery, beautiful. I can't be more transparent than this. I hope this has helped. Make sure you like and subscribe if you like this content. And as I do every day, I'm quite transparent with the trades, and hope this helps and doesn't confuse people. If it does, make sure you drop a comment and I'll try and reply. And I'll catch you tomorrow for NFP, big day. If you have traded NFP in the past, make sure you get your Fibonacci levels right, because Fibonacci is quite an extremely useful tool when it comes to volatile, huge candles. And just before I leave you, if you have stayed this far and you haven't turned the screen off, you're going to get a bit of a bonus. We're on the pound, drop onto the 1 hour, and look at this. Let's get out of the replay. As we said, we're in that fair value gap now, discounted area. Get the fib tool, throw that on the top there. We saw the price stop at the 23, and now it's retraced all the way down to 50%. Where was the 50% of that fib move? It's at equilibrium, right? It's in a fair value gap. This is giving you so much confidence that this was a shortable. You should be shorting this market. Okay, so there you have it. That's your little tip if you stayed at the end. And I'll catch you tomorrow for another trading day, and have a good one.
I can't take no loss. I don't even know what it costs.